Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's May 11th here. Pretty quiet day today. We got only one item here on the economic calendar, and that is the consumer sentiment for the month of May. Our last reporting came in at 98.8. Forecast was supposed to be at 98.7, this downturn, and it remained the same, so unchanged for consumer sentiment. Good news right there. Uh, Headline news, stock market's up. Dow's up about 100 points here. Now, the last couple of days, we've been kind of seeing there's been a lot of different concerns affecting the markets, and right now the fear index is kind of decreasing a little bit here, so there's been a little less fear. So the stock market's been kind of enjoying a nice little rally, so to speak, and we're getting kind of like 7 or 8 days here for the Dow and a positive territory closes, which is bringing us back to basically last November here. So the Dow's been doing quite well. Nasdaq is improving a little bit. We're getting kind of what a lot of investors are saying, kind of a neutral positive for the year so far, and we're kind of getting out, some headwinds that we've kind of been turbulence we've been kind of experiencing in the last few months here with the geopolitical news from North Korea to the tariff wars to inflation, stuff like that. Now, a Fed member, James Bullard, made a comment that he doesn't foresee any inflation, runaway inflation, which is also kind of uh, helping the markets a little bit as well, because that's what they're seeing with the CPI number that came out, the PPI number that came out this week, even PCE that came out the other week, and again, it's going up, but it's not out of control. It doesn't seem like it's going to run away, like what some the concerns were back earlier in the year. So that's kind of easing the market's concerns a little bit here. But one concern he did raise was be prepared that this could be brought up again, is that we could potentially see the inverted curve, which we've talked about before, as soon as September. Now, if you look at the charts, that could potentially happen, because if you look at right now, we're currently at 0.43% in the spread between the 2-year and the 10-year treasuries here. Now, with the hike in June, which is expected, which will be a quarter point, that brings us within a quarter point difference. There's also supposed to be the third hike that they talked about as soon as September. So that's where half a point, half a point going into September, that would exceed that 0.43, that current spread difference right now, and put us into a inverted curve here. So in reasoning, if you reason it out that way, yes, we could potentially see inverted curve as soon as September. Now, why is that a concern? It's because since we've kind of looked at these inverted curves, anytime we get to a flat or inverted curve, it's always preceded a recession. It's kind of put us into recession, and that's primarily because longer-term rates are now less than expensive than the short-term. Short-term rates are become more expensive, and that's what businesses use to focus on helping run business. With make the payrolls and drive businesses as such that way. So again, this is something that to watch out for later in this fall, and be little precautious as to this could be something that could investors will turn to as we get more rate hikes down the line, and that yield spread premium keeps closing a little bit further. That investors will probably start looking at that again. Here's the bond market to see how the bond market is affecting. We had what they call bond rollover yesterday, which is 14 basis points. Basically, what bond rollover is where every month, why we have 30-day pricing, is that they package these up and resell. So last month's were packaged up and sold. We have a refresh on pricing. It doesn't. There's no changes into our rate sheets, so you don't see the difference in the rate sheet. It just on the chart here, it'll look like it's down for the day, like maybe it would go up, but it's not. So that would be equivalent of 14 basis points. Right now, we're about the same as where we left off yesterday. As you can see here, we did touch the floor of support, and so it's a little volatile earlier on this morning. So we're about the same as pricing is where we left off yesterday. So therefore, pricing and the interest rates are about the same, what we saw yesterday here. So don't be concerned about any change of pricing today. Yield spread premium is still about the same as where we left off yesterday at 2.97. We're still in this range here like we were in the mortgage-backed securities. So this gives us be a little cautious out there if you guys are looking to, in any transaction, refinance or purchase, because it could be a long ways upwards or a long ways downwards. So upwards would be great because, I mean, not for treasuries, but for bonds. If bonds were improved this way, that means rates are improving. But if they drop this way, which we're having this downward trend, that could be a reality, and you could lose whatever pricing you have right now and get a price for the worst. So just be a little cautious here going forward. All right, folks. So, anyways, enjoy the rest of your weekend or day. Enjoy the rest of your weekend. We look forward to see you guys on Monday. But if you guys want to get more updates like the market close at midday and stuff like that, and other things I always put up on Twitter, just come over to Mike Bjork on Twitter and see. Hopefully, I'll see you guys there. Otherwise, otherwise, we'll see you guys on Monday. Thanks again for watching. Bye bye.